All right. Hey, everyone. Welcome back. Hold on. Let me just make this chart. Let me fix this chart over here real quick. Okay, there we go. All right. Welcome to the stream. And let's see who's here. Hey, Kai. How are you? All right. Cool. Good to see you. All right. Welcome. Today is Monday. And let's get this thing started. If you're new to the stream, welcome. Let me just explain to you really quick how this works. So first, I'm going to run through the economic calendar very quickly. Then I'm going to run through the charts, right? And then after that, I'll take special requests. If you have a stock or an altcoin or whatever, a market you'd like me to analyze, please share it in the chat. And then I'll look back in the chat and I'll look at your symbol. Okay, so you could put those in the chats now. Also, if you'd like to share what city or what country you're from, that's always a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey. All right, so that's why I may sound funny sometimes, the words that I use. Anyway, all right, so first things first, if you read my analysis that I published on TradingView yesterday, man, I'm wrong again. Like, I'm wrong week after week, but that's the nature of this game. You know, by the way, speaking of being wrong, I want to mention something. Actually, we have to get into the economic news, but if you haven't checked out the guy, what's his name? Um, Roman Paolucci. Okay, he's the Quant Guild guy on YouTube. Check this guy out. Okay, now for me, this is professional growth for me because I'm not a quant, and he explains everything from a theoretical and mathematical perspective. This is the foundation you need to compete in this game. He doesn't share with you some kind of strategy that you're going to make $1 billion on, like all these other frauds. He actually shares the kind of stuff that you would learn if you went to MIT. All right, that's the kind of guy you're dealing with there. He himself is a graduate from Columbia University. So, you know, that's the kind of people you want to be following, not these fraud 21-year-olds who, conquered the market, the Forex market, and made trillions of dollars in one day. He's not like that. But the reason why I bring this guy up again, because, I'm going to be bringing him up a lot, and I'm probably going to be quoting a lot of stuff that he says because I really like him. And it's very rare that I like someone like that. What he made a video recently, Kai, maybe you saw it, where he compares poker to speculating in the financial markets. Now, you guys know I talked about this years ago, where I made a similar observation where I said playing poker is very similar. It's a very similar decision making process, something I recognized a long time ago. In fact, hedge funds, there are a number of hedge funds that require their new hires to learn poker as part of their training, right? But of course, they're not sitting around in some smoke filled room, bluffing each other. They're doing everything from an engineering perspective. But the point is, he compares poker to speculating in the financial markets, and he says that it's exactly the same. The only thing that's not the same are the chips that we're playing for. So he took it a step further. He also compares it to a game of chance, and he shows mathematically why a game of chance, like a typical casino game, like slot machines, is a losing proposition, right? Over time, you will lose all of your money if you continue to play those games. Whereas speculating in the financial markets is something where you can control your outcome to a point, even in the face of incomplete information. This is very important. The reason why is because when you're going through a hard time and you may be losing money in this and that, watching something like this should give you the confidence that this game is worthwhile. All right. And a lot of people don't realize this and they may give up and this and that. But this game is worthwhile because it is possible to control your risk and actually win in the face of incomplete information. That's why there are professional poker players, and that's why there are not professional slot machine players. All right. Anyway, I just wanted to mention that. I thought it was worth mentioning. Check that guy out, Quant Guild on YouTube, if you haven't checked him out yet. I know Kai signed up for him, but I'm thinking about making a video, like one of those reaction videos about that guy, because usually your typical reaction video is usually a complaint about someone or something, but I actually wanted to showcase a guy that I think is worth watching. And this also, I just want to mention another point real quick. This reminds me, of a time when, way back when I was a beginner, this is how I used to treat learning options, right? Because options were very foreign and very complex for me. And I had no idea what they were about, but I casually learned them, right? Which means I would read a book, I would, read a blog or something, whatever information I could get about options, I would learn. So I learned what a call, a put is, but it took me 5 years of casually learning them before I was comfortable enough to place a trade. And I wasn't even making money. I just was comfortable if I understood what a call and a put was, and I was willing to take a chance and risk some money with it. Not a lot of money, but I was messing around. I was willing to do that because I had enough knowledge. So it doesn't hurt to learn stuff that you're not going to use right away. Again, it took me 5 years of accumulating options knowledge. Now today, I throw around options like they're nothing. Like I'm very, very comfortable with complex option strategies because I know exactly what I'm doing. And I can also combine all of that with my knowledge of technical analysis, which makes it even better. But the point is, learning something just because, learning something to learn is never a bad thing. That's all I'm saying. Because eventually it can help you. Okay. And that's how I treat quant finance, because I am the furthest thing from a mathematician. I know nothing about, I could barely add. No, I'm joking. I can add. But you know what I'm saying? Those complex formulas and stuff, I can't, I'm not one of those type of people, right? But I still struggle through that stuff because it's learning. I'm learning something. Anyway, all right, it's enough of that rant. That's my educational self-help rant for the day. All right, let's talk about the economic calendar real quick. So, and guys, let me know what you think of that whole thing, right? Let me know if you watch them. I know Kai subscribed, but let me know if you have any comments or if you're like, this guy sucks. Just let me know. I mean, the guy claims he's from Columbia University, right? He graduated from there. He also worked at Bloomberg, and he could be lying. I can't prove any of these things, right? Maybe he's lying, but I'll tell you what. I'll tell you what's not lying is his math. So, and I'm sure there are people that are skilled enough out there that if this guy was making stuff up, they'd be calling him out. Okay, especially when it comes to stuff like that. Uh-oh, look who's here. Alex from Romania. I'll tell you, he only comes in for me to say that and then he leaves. Alex from Romania. Because I like saying Romania. That's why he's going to leave now. He just wants to hear me say that. Good to see you, Alex. All right. Alex had an interesting question that he sent me an email about with the opening range breakout with the S&P. And I gave you my answer, Alex. So I'm glad you got that. Very common strategy. You'll find it everywhere. So, and it's good to learn. It's good to learn the basics of that strategy so that you could see through stuff like that. Anyway, all right, economic calendar. There are a couple of things worth mentioning this week. All right, so first off, we have, I'm going to read this, Kai, in a moment. Let me just read off the economic calendar. First, we have the Bank of Australia. They have their rate announcement tomorrow. So that's usually in the evening, Eastern time. I'm going to say probably around, 8 p.m. or 10 p.m. I don't know, double check the time. I figured it's worth mentioning, but it's not a major market mover. So just, if you're from that part of the world or you trade Forex pairs that are relevant, keep that in mind. But it's not a dollar mover. On Wednesday, we have the ADP employment change and we have the ISM manufacturing PMI. Now, the ISM manufacturing number, I believe that's an 8:30 a.m. number. Double check the timestamp or correct me if I'm wrong. Just tell me if I'm wrong because we need to get those numbers right. The calendar I look at doesn't have the timestamps, but ISM manufacturing PMI is on Wednesday. And then we have the ADP employment change. Now, that's like a preliminary non-farm payrolls. I believe that's either a 10 a.m. or a 10:30 a.m. Eastern time number, right? Now, the ADP number is not that important, but if there's anything wild going on there, maybe it can cause a movement of some type because keep in mind, non-farm payrolls are going to be closely watched. And that is what we have on Friday. Now that I know for a fact is at 8:30 a.m. Eastern time on Friday, non-farm payrolls. So, and the President Lagarde is speaking a couple of times this week, but who cares? All right, who cares? So non-farm payrolls is on Friday. That's the most important piece of economic information next to the FOMC meetings. You want to make sure you're aware of that. That can move markets in a major way. Now, these economic events, especially non-farm payrolls, are going to be closely watched, especially because of the revisions that we've had previously. That's what the market's going to be paying very close attention to. Now, keep in mind, it's going to, I believe, because of the way the sentiment is right now, it's going to work in reverse, meaning if non-farm payrolls comes out worse than expected, or they revise the previous months even lower, right, and it's really bad, the market is probably going to take that as a good thing because it's going to mean stronger argument for rate cuts, right? As opposed to if it comes in very strong, the market may not really like it that much because then that sides with Powell's hesitation to cut rates, right? So just keep that in mind. That's a sentiment thing. And also, an interesting note on Powell, speaking of Powell movements, we had the FOMC meeting, right? And he was extremely dovish. He was saying things that were pretty dovish. Like he made it sound like they were going to cut forever, right? And that's why that Sunday I wrote my report, buy all the pullbacks, right? Then he has a meeting at some chamber of commerce. He has this low-key meeting, and in that meeting he has a speech or whatever, and it comes out, this was the previous week, and he gets a little less dovish. He's like, well, we're gonna cut as we need to cut, but we're not gonna cut that much. He changed his tune. So keep that in mind. Like, and the market sold off a bit as a result. Keep in mind, Powell is playing an interesting game. He when at the high profile meetings, he tells you what you want to hear. And then when you go to these lesser paid attention to meetings, then he comes out with a little more honesty because maybe, I don't know, I'm guessing, maybe he believes that maybe less people are paying attention when he comes out with more of the hawkish stuff because he clearly doesn't want to cut rates aggressively. Right. And that's why there's a problem, with the White House and stuff like that. And I believe he's doing the right thing. He's trying to keep inflation under control. They're concerned about the job market and all that other stuff. But we do have inflation. So cutting rates just kind of seems like a bad idea, right? Generally. So anyway, just wanted to mention that. So keep an eye on that. He changes his tune, and you have to pay attention to what he says because the market pays very close attention to what he says, and it changes things, right? If he gave that speech before I wrote my analysis, I wouldn't have written buy every pullback, right? Because I thought we were going to easy monetary policy, but it looks like we're not exactly the way he described at the FOMC conference. Okay, anyway, all right. So I'm going to read the chat here. I won't be watching live stream. See, I told you. Alex just came to hear me say Romania, and then he leaves. All right, and then Kai says, I saw the poker video, and I put it on my watch queue. Okay. Yeah, no problem. Yeah, I mean, Kai, like I've been watching a number of this guy's videos. I've been watching a lot of his videos. All right, hey, Arisa Yael, good to see you. Yeah, this guy is good, man. I mean, again, the material that he shares is very theoretical. You're not going to walk away with like a new strategy or anything like that, but you're going to learn things like Markov chains. You're going to learn things like, how Monte Carlo is useful and like what that actually means. And that's this theoretical stuff. Even if you may not understand it fully or be able to implement it, who cares? Like that's not the point. The point is you're learning something that quants learn. This is when you go to school to become a financial engineer, this is what they're learning. So I believe it's very helpful to understand how your competition thinks and what they learn exactly. This type of stuff that he's sharing, I mean, 10 years ago, you had to go to MIT to learn this stuff, or you had to read these books that are very hard to read and that kind of stuff. Or I don't even know, like this stuff was not so easily available. And now here it is. I mean, he's putting all kinds of stuff out there. And it may be boring, but you need to know this stuff. Like if you're a true market enthusiast, this stuff should at least you should have an interest in this. If you're like, I just teach me candlesticks, man. I'm not interested in any of this theoretical math stuff. I mean, who cares? It's nonsense. Well, then you're just a wannabe. Okay, you're just a wannabe because these are the people that you're going up against. People that are PhDs in this stuff. So if you want to compete in this game, you got to understand at least what you're up against, if anything. All right, enough. Let's get into Bitcoin, shall we? Okay, so yeah, exactly, Kai. Exactly. If you're one of those guys, there's 10 million candlestick videos you can watch, and 10 million guys with their luxury sports cars. Have fun. By the way, you will be profit potential for the quants because that's when quant is now basically retail has access to quants, right? And when retail has access to that, that means the bar of competition is going higher. It really is like playing in the NFL. So if you want to compete in the NFL, you have to do extreme things, right? To compete in the NFL. And that's what this is going to be like. So for most people, they're just going, people that are not following that path. I'm not saying you have to be a quant expert, but it should just genuinely be interesting to you. If it isn't, you're going to be profit potential for these guys. Okay? Just letting you know. All right. Anyway, and you'll be out of this game in a year or two. And you'll be replaced by another wannabe. All right, let's talk about Bitcoin and how I was wrong. So remember, this is a random game. Like Paolucci said, a game of incomplete information. I love that. I love that phrase. A game of incomplete information. That is what we're always up against. All right. Which means, as he's also pointed out, forecasting is pretty much useless because we're always facing random information. There's no way to know where something is going to be in a year or anything like that. That's all just maybe if everything stays the same. But as we know, things change. New pieces of information come out and the market has to adjust. So technical analysis has some value because it can help us gauge risk. It can help us find reference points, which are like support and resistance levels. And then we can anticipate a type of action or behavior there. And if that behavior appears, we can then justify a risk. But we have to define our risk. The whole key is defining the risk, right? Now, so when I do this analysis, like on TradingView, I know that there's probably a 50% chance that I'm going to be wrong. I know that because the market does whatever it wants to do, not what I think it's going to do. I drew this illustration right here because this illustration represents the higher probability scenario that I was anticipating, which was basically a failed low, right, relative to this low. That's what this represents here, but we never got that, right? It just basically, when I wrote my article, when I wrote it, price was fooling around like 110, something like that around here. And it's just been going vertical ever since. Okay. And we're now back into the 113 area. Now, here's why this is important. And I have an arrow pointing to the 113 area. This 113 area is the midpoint of the range, right? This right here, this line is basically in between these two rectangles. You see that? These two rectangles represent the general support and resistance of the consolidation that Bitcoin is in right now. So that means that the boundaries, the support and the resistance, that's where the probability is going to be in your favor if it confirms, meaning you go into the support zone. I mean, look at this. Look at this. If I drew this rectangle over here, I continued the rectangle. I mean, look where it bounced. So there was obviously a higher probability that it was going to reverse from there. It also gave us an inside bar, right? Rather than continue lower. But I suspected we'd get the failed low, right? And I was wrong. But there was no way to know if it was going to behave like this or not. Same with the resistance. If we get back up to the resistance, this would be a fair place to be looking for selling activity or some type of bearish reversal. The thing is, we have to look back at the bigger picture and say, well, this entire consolidation is a higher low consolidation, right? In the eyes of the bigger picture. If I zoom out, that's pretty obvious, right? If that's a higher low consolidation, like we've seen other times, then chances are that resistance will break, right? Supports hold in a bullish trend are more likely to hold, and resistances are more likely to break. So if you're feeling aggressive and you want to short that, you're taking a greater risk because there's a good chance, or a better chance, in my opinion, that this thing blows through and starts working its way to new highs, right? And that would be, eventually, if we break out, you're looking at the 130s. If we break out of this consolidation, which then would qualify this as the wave four, the broader wave four, which has been very tricky. And then this leg, or maybe the next leg, could be the beginning of wave five, which can take us to that 130 area. You must pay close attention to that. When you're working on these larger time frames, it's hard because you have to wait longer for stuff. This type of move that we're looking at right now, I think this is great for small time frames, right? If you work on 5-minute charts, 15-minute charts, intraday time frames, there's lots of opportunity in stuff like this, tons of opportunity to day trade, especially if this thing wants to just continue higher and work its way toward the resistance, or if it reaches the resistance and rejects it initially. Plenty of day trade opportunities. Of course, you would use a smaller time frame to arrive at those confirmations and to define your risk. But when it comes to the bigger picture, when it comes to swing trades or investing, this is a horrible area. This 113 area is a midpoint and highly random. It can go either way from here. Maybe it continues higher, maybe it pulls back. There's no way to know. Okay? There's no way to know unless you have inside information. Does that make sense, you guys? So now, if I say something that confuses you, please let me know in the chat. Or if you don't agree, let me know. That's okay. We're here to talk about alternate point of views, right? I'm not saying that my view is always right. Clearly, if you look at my trading view articles over the previous few weeks, I was wrong a few times, right? My illustrations have not been playing out very well. And that may have something to do with, the randomness, the random nature of this consolidation we're in. And it's going to be hard to call this. I mean, look at this. We had this 113 test back here, right? Remember this? 113 over here, right? And what do we get? An outside bar, a bullish engulfing candle. And that's a buy signal. In my book, that's a buy signal. If you bought that, you got stopped out by this ridiculous red candle that just appeared randomly out of nowhere. I don't know what the catalyst was behind that, but as you can see, it was meaningless. Meaningless noise. This was nonsense, this candle. It probably lured a lot of shorts. You know, all the reactive clowns on TikTok and on Twitter and on YouTube, they're probably all calling for shorts. Bitcoin's going to zero, and now it's not going to zero. Okay? This is not a short. This thing is not a short. Shorting this thing is extremely risky, especially at range support levels. In something that's generally bullish, in a monetary environment that leans toward the dovish side. Does that make sense? All right, so as far as Bitcoin right now, I mean, as a swing trader, there's nothing to do here. Let me know if you guys don't agree, right? There's nothing to do here. I wouldn't touch this thing. As a day trader, we'd have to look at smaller time frames, but that's where I would be most interested as a day trader. Minor pullbacks, trying to take small bites out of it on the long side, and looking for resistance levels maybe for a quick shorts. But your most notable resistance is going to be that 115 to 118 up in this area, right? Up in here. What is that? What is this here? That's 117, right? So basically 118, that area. But I wouldn't short that and think you got like the short of the the short of the you won the lottery. You know what I'm saying? Because this is likely to break, and we're likely to see the high again. I could be wrong. I'm leaning on the probability that I'm getting from the broader picture. If we go to the weekly chart, this is where I get that idea from. This is bullish. This is not a bearish chart. And all we keep doing are we keep consolidating and then breaking out to new highs. We haven't really broken any major supports yet. We can't even break 108. We can't even break that. And that was the wave 1, wave 4 overlap area, which I think I'm wrong about. That's why I suspect this consolidation we're in is still all part of wave 4. And we're looking at the 5th wave ahead of us, right? We're looking at what? Another rate cut this in October, the next month coming here. We're looking at another rate cut, I believe. And then again in December, I think. Oh, no, they're going to do what? 2 more rate cuts or something? So that is going to, at least, if anything, have a bullish effect on an anti-inflationary asset like Bitcoin, at least theoretically. All right, let me know if you guys agree, don't agree, whatever. I'm going to move on. But that's Bitcoin. So you guys clear? If Bitcoin, if, it's always about if Bitcoin pulls back to that 108K, 105K, you should be looking for longs. You should be looking for reversals to go long, right? You could use a daily time frame. You could use a 4-hour time frame. If it gets up to 118, that's a place to take profit or aggressive short. But I keep warning you, it's likely to break. So I wouldn't have a lot of confidence in that short. All right. So I'm going to leave you with that. That's my summary of Bitcoin. All right. Hey, Izzy, how are you? Good to see you. Okay. So I'm going to move on now. So I'm going to jump over to the S&P. All right. We can look at, let's see, SPY. Or if you guys prefer the futures contract, let me know. We could look at ES1. It doesn't matter. The chart's going to be the same. The thing with ES is we just see the overnight data. Now, so this S&P, by the way, this is also, whatever I say about this also counts for the Nasdaq. They move the same, right? So the Nasdaq may be a little more dramatic, but the S&P is really like the heavyweight here. Look at this thing. So this we have higher lows established over here. Okay. This thing, it's just in ridiculous mode. This is ridiculous mode. Look, higher lows. See the higher lows? And we're attempting the highs again. Shorting this thing for anything more than a day trade, I believe, is still high risk, right? Maybe we form a double top, but there is just no catalyst. There's nothing in sight to turn this thing. I mean, you need some type of bearish catalyst. And even then, before we could say it's turned and we're looking at some type of bearish cycle, we need to break the support. We have not broken any support levels. None. All right. So there's not really much to say about the S&P. I would not buy it now. These pullbacks are also too brief and too small for me to even want. Like, I want to buy the S&P, but I just can't do it at these levels, right? Like, we're not even getting back to like this support area here, which is an area I'd be a little more comfortable buying, at least like one share of the SPY. But I really want to see something like a 20% pullback or something like that before I really start getting involved as an investor, because I don't want to buy these ridiculous prices. We're looking at hot air here. That's what we're looking at, in my opinion. These prices are rising as a function of inflation. This is not healthy economic growth. And that's the way it's been. And maybe we're going to see some more of that. But as long as that's the case, I don't feel comfortable. Now, I know some people, hey, you're a moron. Hey, you're missing out. I'm not taking any risk. That's what I'm doing. Okay. I'm risk adverse. I'm not taking any risk here. I think it's too high. That's the problem with these slow grind markets that just keep going higher and higher and higher and never pull back. The problem is it's like the risk continues to be high, but it never pulls back. So it's like you basically have to buy it and hope for the best. And do you really want to throw in like a large amount of money, and like that's just stupid. Even trying to dollar cost average in, if you're buying like, 25, 50 shares at a time, there's so much room for this thing to pull back. I mean, and we saw it back in April with the tariff drama. We saw it. And ever since then, it's just been hot air. Okay. Uh-oh. Inflation going to be over soon. Yeah. Yeah, we're still waiting. We're still waiting for that. But I mean, look at this though. Come on, seriously. I mean, look at this. So my point about this is we can get another one of these dramas that come out of nowhere. This wasn't even a surprise, the tariff drama. We knew about the tariffs. I'm not going to say I talked about this before. I'm not going to repeat all that, but I'm just saying so we can just get some nonsensical behavior out of nowhere. That's why I don't trust these charts. I want to see support levels, if anything. So look, so we'll jump over to the Nasdaq real quick. But as far as a level goes for the S&P, this is my level, 646, basically 645. That's what I want to see, or maybe 640 or 635. Right now we're at 663. We're not even close. What is that? Let me just measure that real quick. What kind of pullback would that be in terms of percent? Four and a little over 4.5%. That's not even a lot. All right, look, Nasdaq real quick, right? QQQ. I mean, look at this nonsense. It's the same chart essentially. For the Nasdaq, I was looking at this number, right? 581. Where are we right now? 598. So for the Nasdaq, I mean, to get back into this consolidation area from where we are now, again, what is that? Almost 5%, almost 5%, right? From the high, which is, and that's still like, that's like basic. That's like a normal, healthy pull. That's not even a real pullback. That's just like a mean reversion. You know what I mean? That's like nothing even, that's a small correction. We can't even get that. So until I see at a minimum that, I'm not touching this stuff. I have no faith in this, especially when I see what's going on with the deficit, the money printing, the pressure to cut rates. Like I just, I don't know. All right, let's take a look. Speaking of all that, before I start jumping over to the other things like the gold and oil, which I'm going to cover, let's take a look at the bond market. We should always look at the ZN1, okay? For those of you that are not familiar with ZN1, this is a 10-year note futures, the Treasury futures. So this gives us the bond price, right? And obviously the yield is going to be inverse to this. So if price is pulling back, that means the yield is rising. It's strange. We have a rising yield. Fed keeps talking about cutting rates and blah, 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 money printing. Shouldn't the yield be going lower? Well, the 10-year note trades on its own, right? The Fed doesn't have a major effect on the 10-year or the longer duration yields, right? So the 10-year, the 30-year, this price has pulled back, interestingly enough, which means yields must be rising. We could take a look at the 10-year note yield in a minute here. So that's US 10Y, right? That's the 10-year note yield. I mean, here's the yield. Is that right? I mean, so let's go to the weekly chart. Look at this. So this seems to be a little off. Like it seems to be out of sync, right? So those bond prices are going lower. Yields should be higher. Don't you think? Yields aren't higher. That's interesting. What's going on here with that? Either way, you could see the yield is inside of a consolidation. Look, here's your range low. This is a weekly time frame. This is your range low right here. This is your range high. This chart right here can be very helpful, especially for investors, especially if you buy property or you borrow money for other reasons or whatever. You should pay attention to this chart. Right now, look, the yield is in the middle of nowhere. Right in the middle of the range. It can go either way from here. We're expecting more rate cuts, right? So the rate cuts should theoretically have some type of negative effect on this, but as we know, it doesn't have to affect this. This trades openly. So if investors feel that the US cannot pay back these loans or the bonds, they can't pay them back, then this thing is going to rise. So if you see this thing breaking out to the upside, that means we have a problem. That means the Fed is the Treasury is not able to sell all the bonds that they're trying to sell at the auctions. That's what that means. If you see that, okay, if this is breaking out. But as you can see, this thing moves very slowly. If we break lower, okay, and rates are going lower, then obviously that's the effect that everyone's looking for, right? That's cheaper money. That's inflation. So just keep that in mind because this affects everything, every type of loan, auto loans, property loans, business loans. This is where the game begins, right? So keep an eye on that range. Right now, we can't really say much about this except that it's poised to break higher. That's what it looks like. It's poised technically, what it's poised to do. But again, this game is not just technical. There are fundamentals involved, especially when it comes to the bonds. I don't understand why these yields are rising. Why would anyone doubt? Yeah, UTXO, I don't know. I don't know. Maybe we should ask Jerry Seinfeld. So, yeah, it'll be interesting to see how they handle these things. Now, so speaking of this, so the bonds aren't really telling us much right now. There's just a lot of I don't know what. I don't know what to make of that. Besides, it needs to pick. It needs to choose one way or the other, and whichever way it chooses, that's going to be a sign, right? So, like if we break higher on this thing, you're probably going to see real weakness come into the stock market because no one wants to see rising rates, right? People suffer with rising rates, but we see this break lower. That means hyperinflation, and you should go to Home Depot and buy a wheelbarrow for your dollars. Let's take a quick look. Let's go real quick to gold, right? Well, we're going to do oil and gold. So let's do gold first, since it's kind of relevant to this. Let me know if you have questions about this too, if I'm not making sense or whatever. Now, keep in mind, I'm not an economist. So I'm looking at this more like you would as well. I'm just trying to look at this for practical purposes. Let's take a quick look at gold. Now, gold is up like 67 points today or something wild like that. Kai, you must be real happy. Look at this thing, man. This thing is like ridiculous. Look at this. This is just like vertical. This is like nonstop. This is gold. Wow. I mean, look at this. So something like this, there's definitely day trade opportunities if you're willing to take the chance to day trade gold futures. There's micro gold futures. There's also the XAU CFD, which is what I'm looking at over here. I mean, look, week after week after week after week, just high after high after high. This thing's not even pulling back. What does that tell you? What does that tell you about the dollar? I mean, someone knows something. Plus this time of year is also a cyclical time, a bullish time for gold, but still, I mean, this thing's nonstop. I mean, let's take a look at silver, XAUUSD. Look at this. Are we at 50 yet? 46.85. Look at this. These things are vertical. Silver never acts like this, ever. Okay? So I closed my position. I figured it would hit. Okay. Hey, whatever. Nothing wrong with taking the money, Kai. Nothing wrong. Especially when things look their greatest. That's usually when you want to take money. I mean, this is when the morons pile in, right? So you sell to them. Nice job. Excellent trade. Kai called gold long. Actually, he had a straddle in gold weeks ago. It broke out. He closed his short side and just made a nice move on this, man. Wow, what a move. So the point is with something like this, while it's vertical, great for day trades, right? But the higher it goes, the more risk you take. If you're buying this thing now thinking, oh, silver's going to go to 100, this is when all the conspiracy theory guys come out. There's no gold in Fort Knox. Silver's going to 10 million thousand because, there's no silver and there's this massive silver short. That's when all that stuff comes out. Don't pay attention to that stuff. I'm not short gold. Yeah. When they look their best, that's when you really need to be wary. Now, at this moment, there's no reason to sell at this moment, but that doesn't mean it's not going to change this week, right? This thing could turn into a bearish pin bar very easily. So I would not short these markets. Of course, I've been saying that all along. Do not short gold. Do not short these markets because you're asking for trouble. But I mean, it's amazing to see. Now, when gold pulls back, XAUUSD, when gold pulls back, I believe there'll be another opportunity to buy as long as these fundamentals stay the same and the Fed continues. Now, keep in mind, right? Next year, they're anticipating Powell to be replaced, right? Silver looks on. Yeah, I wait for a significant pullback if there is one where I want to invest some. But man, right? Yeah, I mean it's nuts like that, right? It's just nuts. That is something. Now silver, I know it's obviously it's an industrial metal. It's the best conductor of electricity. Why is that important? Because AI, we need electricity, right? That's one of the catalysts behind it. Plus, the economic uncertainty and the hyperinflation and all that other stuff. So metals are going berserk, right? That's certainly a sign of something. Now, pullbacks on these things, the ideal level would be the old consolidation. This would be the ideal level right here. That's the ideal level. If it can get that far, I doubt it, but if it can, yeah, silver is heavily industrial, and I learned a whole bunch of stuff about this. Silver, um, recycling for the longest time, recycling silver was what kept the price in check. But now they're not able to recycle it as much, or there's a reason. I forget the reasoning behind that. But the recycling process is not silver is not being recycled, and maybe it may have something to do with the demand for electricity or something. I don't know the exact points on that, but there's stuff on YouTube about it. It's very interesting. So, as technically speaking, you want to watch these price levels, okay, on gold, which was the old consolidation, which the high was 34.35, so 34.50 area, or the midpoint, which is around what 33.50. If gold could pull back, and now that would take gold probably months, especially at this rate, and there would have to be something, some sort of catalyst to really turn it around, right? Right now, there's just no such thing. Yeah, look into that, Kai. There's something about silver recycling. That the recycling is what kept the supply of silver heavy for decades. Okay, but now they're not able to recycle it fast enough, or something like that. But that's one of the main factors. What's behind silver? So you know that's all great stuff. It's just you can't buy these things at the highs. Like fundamentally, gold and silver, these metals are going to have, I believe they're going to have a bullish. I mean, let's go to like back to the weekly. You know, any type of pullback. If we could pull back that far on gold, that would be pretty amazing. But we may not. We may have a tight pullback. Like to what? Well, you could take just a, you could do like a retracement. Let me get rid of these lines to avoid the confusion. You could just do a retracement, right? And you could do something like this where you measure this. And I mean, 35.73 is the 50% pullback, right? 35.73 is right here. That would be a pretty reasonable spot. That's 200 points away on gold. Okay. So, but that would be a nice range low. Like as you can see, gold consolidates for long periods. How long? Like a typical consolidation. I mean, look at this. Typical consolidation for gold, 13 weeks, right? In that instance, up here, it's more than that. What is it up here? It's more than that. I mean, this is more like 21, 22 weeks up in here. Weeks it can consolidate. So keep that in mind, right? It's not like it pulls back and turns right around. Gold's been so gold consolidates for long periods. So when it pulls back, let it define a low, and that most likely will be a range low. And any type of steeper pullback, I mean, as long as these fundamentals stay the same as long as the Fed keeps talking this dovish talk. Now, here's a point that I was going to make. Pay attention to the changes in the Federal Reserve. You know, the administration has been actually working behind the scenes to get some of these Fed governors removed. Why do you think? Because they want to get some more yes men in there, right? They're very good at doing things like that. You got to pay attention. They put this guy Mirren in there, and he's a yes man. So if he's a Fed governor, I forget what state or what region he's the Fed governor of. I can't remember. It might be New York. I don't remember. But a guy like that, if he gets picked, if they want to replace Powell. Powell, they want to replace him. He is a pain in the Powell. He is a pain. They don't like him because he's trying to do things the right way, right? So they put a yes man in there. I just don't see how gold and silver are going to pull back. I just don't see it because they're going to be like, we're going to put rates at zero because we feel like it. Okay? Invest in wheelbarrows. Start a wheelbarrow business because people are going to need them. That's all I could say about that. I mean, let me know if you don't agree. All right, but watch a change like that. Watch those Fed governors. Watch that because over the next year, Powell is going to be up for replacement, and they're going to put a yes man in there. All right, so watch out for that. That's inflation, and the stock market is going to love it. So, all right, let's move along here. Let's take a quick look at oil. Oil was negative today. And guys, let me know, also, if you want to look at some trades, if you want to look at some charts, if you want to look at a symbol or whatever, also put in the chat, what you're thinking. Instead of just a symbol, put, short Microsoft or, long Bitcoin or whatever. Put the side that you're interested in taking so I can match it more to the perspective that you're considering. I have some more context. Okay? So here's oil, right? CL1, this is the crude oil contract. This has been doing nothing, right? It's been range bound pretty much in the face of weakening dollar. This should also be going higher. This may be one of the arguments that they pulled out. We have no inflation. Look, energy prices, they're not going anywhere. Well, yeah, but this market is very sensitive to a lot of things. And I suspect that, I don't know, there could be some kind of manipulation here, maybe. This is acting very strange, okay? Oil should be going higher in the face of inflation, but it's not. So fundamentals aside, you have a clear resistance level. Is anyone short oil? I remember Ricky talked about oil a lot. I think he was shorting it at one point. Anyone short oil, or maybe he was buying it? I can't remember. Look at this resistance. This is what I mean. When it comes to technical analysis, you can have some helpful information. Look at this. Look how many times it touched this line. Okay? There's some significance to this level. And that happens to be the 65 half area. Look at the week before, what we got, a bearish pin bar off of this area. If that doesn't tell you you should not be long, I don't know what would tell you that. Do you guys see that? This is where technical analysis can be extremely helpful, because if you were long oil, you should definitely not be long. You had plenty of warning. This is a daily time frame. So what? This is Friday. So if you're playing around with oil, oh, I'm long oil, I'm gonna have a sports car by next week, and then you see a pin bar, you should be out. There's no reason to be long when you see something like this, resistance and bearish pin bar. That's a price action confirmation, right? So that tells you that your long risk is very high and your short risk is very low. So if you were aggressive and you wanted to short oil, wow, you're making money now. Oil is a tough market to trade, right? I mean, I wouldn't trade it on a daily time frame. If I were to mess with this, it'd be on the smaller time frames. But you see what I'm saying, though? So that's your resistance on oil. Now, oil has been generally weak. With oil getting cheaper, there's no reason not to buy a sports car, right? Exactly. Because, oil changes should go lower, right? Gas should go lower. This is your support level on oil. So if that support level, just like the Bitcoin resistance, I believe is likely to break, that support is likely to break because the general structure here is not bullish. I mean, if anything, it's range bound, the bigger picture. But this consolidation that we're seeing right here, this low and this high, this consolidation, it's going to redraw the line over here, right? Because this goes all the way back. That's how far back this line is relevant. Okay, that level. That's how far back it's relevant. It's not exact, but you could see it's not a coincidence, right? It's a lower high though. So where you have a lower high, a lower low is likely to follow. That's what I suspect. So that means if oil pulls back into this low, 61.85 area, you could round that to 61.50, 61. I would not be aggressively buying. Does that make sense? Even if a bullish reversal appears, I'd be a little more selective. Kai says, I am in a contrarian play. Long calls of BTC proxies. Okay. I wanted to have some long BTC exposure via options. Okay. Well, okay. Well, but you know what, Kai? I mean, I see the long argument. Yeah. Yeah. I don't, I see the long argument, but I always maintain an open mind, right? The charts tell us one thing until it changes. But Bitcoin is generally bullish, and I suspect we break out, right? I believe a breakout is more likely than we break supports, right? Again, unless something else comes along and changes that, and that's the nature of the market, something unexpected comes along and throws off the charts. That happens. That's why we manage risk. That's why we define risk. We define our position size, right? That's why we do that. People get all caught up in the charts and the RSI and all that other nonsense, what their favorite fake guru tells them, but they don't realize that the key to this game is how you size and how you manage risk. That's how you play a game of lacking information, right? A game of incomplete information. That's the focus. That's what a professional poker player does. They manage their risk because they can't control the outcome of the cards. Right? So anyway, you see that here with oil? So I wouldn't be going nuts buying oil if it touches that. Like right now at this point, there's nothing to do. I wouldn't short this thing at this point unless it's a day trade. Sure, there's weakness here, right? But you have to look at smaller time frames to define your risk and all that other stuff, right? We can't do that from this time frame for day trades. But this gives you like a broader idea. So when we get to that lower support, you see what we're looking for, right? Or what would be the 63 area. That's where a possible long could develop. But let's say you see a pin bar, right? A long, and you take that long. And let's say it's not oil. Let's just say it's something else. It doesn't have to be oil. You may have this experience in some other market. And you buy that pin bar. And the next candle breaks below the pin bar. You should be out. Because when you get a bullish reversal, it should reverse. The momentum should reverse, not turn back bearish. That means it's not working, right? That's so you may not even be at your stop yet. You're like, this thing is not working. Get the F out. Get out earlier. And if it fakes you out, okay, no problem. You get back in, right? That's the risk. Minimizing that loss is more important than being right. Okay, in my opinion. Okay, that's oil. Let me know if you guys have any questions about that. Now, I'm going to jump over to the dollar index. Now, let me know, guys, if you want to see something. Kai, do you want to see Mara? Your long calls on proxies like Mara. Let me know if you guys want to see any charts. But like I said, if you want to see a chart, just tell me long, long and then symbol, or short and then symbol, so that I can have a little more, I can offer you more perspective relative to what you want to see. Okay? Let's take a look at the dollar index, DXY. So this is the dollar versus a basket of currencies. Usually this is inverse to like the bond yield, right? Or whatever. Or, usually it follows the bond yield. If the bond yield is strong, usually it means stronger dollar, right? Stronger yields mean stronger dollar typically. But I don't know. This market is not connected, right? It's not connected like it has been. It's something weird is going on here. So I mean, so we looked at the yield, at the 10-year note yield. We looked at that and we saw it was in the middle of nowhere. Okay. Yet the dollar, um, compared to its counterparts, is looks like it's a little stronger, relatively stronger, right? It has a double bottom. Looks like it's testing this. It tested this range high a bit there, right? So the dollar strengthened a bit. That's strange, but maybe it's because, but maybe that's telling us is that all the other countries or the currencies in that basket are just doing way worse than we are. Because the U.S. likes to export our inflation. Maybe that's what we're doing. We export inflation and we give it to other countries. Maybe that's what's happening here. I don't know, but the dollar relative to other currencies has gotten a little stronger. Let's go to the weekly time frame, right? That's the daily time frame. Let's look at the weekly. And the weekly, this is where, I mean, we can see that dollar weakness, but it has a double bottom, right? It still hasn't broken any resistances yet, though. Look, when we look back, look at these resistance. Here's an old support. See that old support, right? Old support, new resistance. We have another old support over here. See that support? See that? Put a little arrow. Put a little arrow there. This old support right here. See that? New resistance. So we're still respecting it, right? So as long as the dollar respects that resistance level, it's reasonable to anticipate a test of low again on the dollar, which is in line with all the Fed talk and all the economic fundamentals that are in place right now. We're expecting 2 more rate cuts, even though Powell kind of changed his tune a little bit at that Chamber of Commerce meeting. We're still expecting those 2 cuts. Keep an eye on things like the Fed Watch tool to see how the market is pricing it in. But if we're getting all of that dovish nonsense, all that dovish talk or whatever, then this should be pushing lows. The resistance should be respected and we should be pushing lows, theoretically, right? Unless, of course, we're exporting so much inflation that the ECB and everyone else just goes straight into the toilet, which, then this will go vertical, right? That's the tricky part of this whole thing. There are a lot of moving parts, and I am not an economist. I'm just going by these charts and kind of getting an idea using support and resistance levels as to what is within reason, and then trying to look at these things in the context of the economic environment and how that's changing. And I am not optimistic about this economic environment. I just don't see how it's going to get better. I just don't see it. When they're doing the things that they're doing don't make sense to me. But maybe there's something I'm missing. I don't know. Hey, Savi, how are you? Savi from Brooklyn. How you doing? He doesn't talk like that. I met Savi. Okay, so Savi says, I'm watching Bitcoin. Savi, there's an event coming up on Saturday, by the way. I'm watching Bitcoin 105, 108 support and resistance 118. Okay, with Trade Scanner Pro counter trend enabled. And okay, and time frame 3H, 4H. Okay, yeah. So I covered Bitcoin at the beginning of the stream. I'm glad you're able to get by. Kai, short idea. Okay, I'll take a look. Kai. So Savi, yeah, so I talked about those exact numbers pretty much, right? That 105K area. In fact, that's what I wrote in my article. Clearly, you're the only guy that reads the article. No, I know a couple other people. A couple other people read it. And the resistance, yes, the 118 area, yes, yes. And you're looking, okay. So and you're looking at 3H and the 4H, yeah, okay. No, that's fine. Now, if you're looking at those resistance, I don't know if you're thinking about shorting it up there. Like my one of the main points that I made about Bitcoin in the stream here is that I suspect that if we start pushing that resistance, that we're going to break it, because the general trend on Bitcoin is bullish. So rather than getting another fake out, look, a fake out is always possible, but I'm leaning on the probability that we break out and then we go into wave 5, because chances are this consolidation that we're in is wave 4. And if you want a nice visual example, just look at gold and see how gold behaved after its breakout, right? I mean, consolidations, when they break out, man, they break out. And gold is a beautiful example. I suspect Bitcoin can pull a move like that. So it's within reason. Whether it does it or not is another story. But that's what I would bet on. It's just as an investor, I don't like these prices at all. I just don't like these prices. So I have no problem not taking risk. So okay, nice to see you, Savi. Savi's a nice guy, man. I got to meet him a couple of times. He comes to the CMT events in New York. He comes there to stalk me, and he's a great guy. One time, this is a little while back. I tell you, Savi is a great like sidekick because there was a girl there, right? This beautiful girl, and at CMT events, it's like data scientists. It's like a sea of data scientists. So there are no beautiful girls at the CMT. You don't go there to hook up. Let's just put it that way, right? It's definitely not one of those type of events. So I'm sitting there with Savi, and I see this beautiful girl, and I'm like, Savi, let's go over there by that girl. I wanna, maybe we can talk to her. And he says to me, yeah, I don't know if that's a good idea. I'm like, why not? He goes, I think she has a boyfriend. I'm like, what makes you say that? He's like, well, there's a guy that's right next to her with his arm around her. I'm like, oh, good point, Savi. I hadn't noticed that guy. Good thing Savi was with me there because I would have went up to her, hey, what's up? Meanwhile, the boyfriend was literally next to her with the arm around her. I had not noticed him. So you see, it's good to have Savi around. Anyway, all right. So enough jokes here. So let's take a look at this here. So Kai is thinking short on this thing. All right. Now I'm not familiar with this ETF. What do they do exactly? Let's take a look at the weekly. I know this has nothing to do with the football team. So thinking short. All right. This is the weekly time frame. Well, I see your idea, Kai, because look, you have a double top right there, right on the weekly. So that part makes sense. The thing is, it's a little conflicted because you have this bullish structure. Okay. Okay. Oh, that makes sense. Okay. You have this bullish structure, right? Higher lows, higher lows. So shorting this thing now, for one, you're at a potential higher low. Look at this old support right here, right? Look at that old support. So this is a risky short in my opinion right now. Like a less risky short would be you test the high again, and fail or failed high, right? Or a lower high. The failed high would be nice. If you were going to take a short on something like that, what were you thinking of doing with options? Like buying puts or something, or doing or put or call spreads, bear call spreads maybe. So you have that. It's not not an ideal, but maybe touches. Okay, right. If it does that, Kai, if it retests this level, I mean, look at that beautiful pin bar. That would have been nice. If you get a retest and some type of confirmation, yeah, I can see that idea. Or even it makes the higher high and fails. I see that idea also. The other thing is if it sells off from here, because at this point, anything can happen over here. If it sells off, retests that support right there, and then rallies to produce a lower high, that lower high would be here. You see that? Do you see that like that mirror image? That basically turns into Head and Shoulders. Like it basically, that resistance would come back into play, but over here, right? Not now is too early. It needs to test the lower support. You see that? I'm currently waiting for a clearer picture. Okay, yeah, I agree. It makes sense. So the lower high is a possibility. That would be like another area to watch if you don't get the failed high, right? The lower high is a possibility. Just keep in mind when you're in a position like that and you get the lower high and it turns and maybe your position is green, it needs to make the lower low. If it does not, then it's in a consolidation, right? And this thing you may still be in a situation where it consolidates, right, in this area and eventually goes higher. So just keep that in mind. right? Like, and I know you're more sophisticated, so I know, like, you know how to have an open mind. Like, but some people may think, oh, I'm gonna use this as my profit objective. You know, like the swing low, that low over here, which would be unreasonable. Make sense? Okay, yeah. So as long as when you start to see, if you take the position, that's the thing. Like, taking positions is one thing. Like, you take the position because that's how we take risk. But when you see the thing not doing what it should be doing, that's what calls for adjustment. Whether it's lightening up your position or exiting early, right? Because you can always get back in. I do that all the time. I get into something and I'll get out in 2 seconds if I don't like it, and I'll get back in, because you're better off doing that. Like, yes, it churns sometimes, and you especially as a day trader, you churn it sometimes, but you're better off churning and losing small amounts than getting caught in something. Okay, because I've gotten caught in things. So, all right, so good. Thanks for bringing this one up. So, people, pay attention to the stuff that Kai calls. Remember, he's the guy that called gold long with a straddle a few weeks ago, and that was a beautiful trade. So anyway, anyone else want to see something? Usually people put stuff in the chat. Anyone want to see something? You want to see a stock, a coin? Let me know. Let me know. We have some time. We have a little bit of time. For a few minutes. I'll do one more. You know, I'm going to get a guy who comes in just as I'm signing, as I'm turning this thing off. Can I see Intel, and can I see yeah, Mara? Okay, sure. So let's take a look. So this is Mara US. Is this a coin? It's a coin, right? Is Mara a coin or is it a stock? This is the Mara, the stock. Okay. But I had, yeah, gold was amazing. Dogecoin. Okay, let's see. Let's see. All right, so I'll do Mara first. Is Mara a coin? I don't know if it's a coin. I don't think it is. I don't see it against USD. I'm just looking at the symbols here. Oh, it's a stock. Okay. Oh, I see. Okay, so here's Mara. All right, the stock, and Kai is playing this as a Bitcoin proxy. Okay, so let's take a quick look. Let's go to the weekly chart. So this thing, I mean, all right. So bigger picture, look at this thing. It's all over the place. So there's no clear trend here, right? Not on this time frame. So look at the support and resistance levels. You have basically, look how far back I look here. You got something going on there. You have something going on here. You have something going on, not really here, more like up here somewhere. You got something going. Those are your levels on this thing. Okay. So right now, this thing is working its way toward the middle, just like Bitcoin. We talked about Bitcoin in that midpoint area. This is a highly random area right here. Bad area for positions. Okay. For new positions. So if you're long, great. I mean, you have a higher low in your favor. I wouldn't take any new longs here. If you are looking to get involved in this as a Bitcoin proxy, I mean, you have to wait for pullbacks. If anyone else is looking at this at $14, 14 half, something like that. Kai says, I see this as a breakout idea. Set around, okay. I like that. If I'm wrong, I will know quickly. A new lower low, is it okay? Yeah, well, I agree. I mean, so because this thing is consolidating. So if you break this higher low, if you break that, then you're probably on your way to the range low at that point, right? You're probably on your way back to here. And that would be a place to be looking for range low longs in that area. But if it breaks out, so if you're playing a quarterly report, a company report, and it breaks out, I mean, you have a lot of room here for the next resistance. You can call this a minor resistance, but that's like a midpoint area. You know, that this area might be a good place to maybe take something off the table just to take profit. You know, that area right there, which is what? Around $21, $22. And then you could give it a chance to see if it could retest the $29 area, right? Obviously $30 the whole number, so that's going to be like the major number right there. So 28, 29, 30, that would be a good overall profit objective for this thing as a long. And I would imagine if this is your Bitcoin proxy, I would imagine Bitcoin should be doing something similar, right? So, well, but if this is a quarterly, if you're playing the company report, that's going to be independent of Bitcoin. But Bitcoin should at least be somewhat. I chose this over BTC or Mister because Hive and cheaper options. Okay. All right. Well, cheaper options, nothing wrong with that. So I would imagine you're long the options if they're cheaper. Okay. So thanks for sharing that one, Kai. I hope that gave you some perspective. Let's take a quick look at Dogecoin for my man Savi there. Let's see what's up here, Savi, who helped me out with the observations at the CMT events. Savi's like my sidekick. He showed people like, so what do you do? He's like, I'm just one of his followers. You know, at these network. I don't even know why I go to them, Savi, because I mean, it's like kind of pointless. There's no networking. No one likes me there except for you. So anyway, all right. Here's Dogecoin. Let's go to the weekly. No one likes me at the CMT events. There is high value in a man that sees what other men. Yeah, I'm too busy looking at the girl, and he's observing the context, right? And I'm too busy looking at the spike in the price, and he's looking at the context. So let's see here. So I'm just looking. All right, so this thing, I go there to see you. I know that's why Savi goes to the CMT events. He just goes there to see me, but no one else likes me there. No one likes me. Savi, would you agree? No one likes me at those events. So overall, like Dogecoin isn't really doing a whole lot here, right? Like I would say it's relatively weak to Bitcoin. Bitcoin is on the verge of breaking out again, right? It looks like it's in that range. So you could play this, I guess, sort of like a proxy, but let's just look at the levels, right? So that's your support. This is your resistance right now on Dogecoin. So these are your main levels, right? You may have some smaller support maybe in the middle, but you know how the midpoints are. You have something going on in here. See all these touches right here? What is that? 20 cents. You have something going on there. That might be good for like an intraday thing maybe, or if you want to start an early position, but anything can happen there. Your key level is this range low. Remember, this is a weekly time frame. So the range low is about 15 or 16 cents. You see that? The Polish girl, I don't know. You think she liked me? I don't know. It's hard to tell. She barely spoke English though. But I know that doesn't matter. It doesn't matter. But I think she only liked me because I'm a CMT. Altcoins either going to have a fantastic or yeah. Well, if we keep going on the printing money route, I mean, it's going to catch up to the altcoins, right? If we keep printing the money, she was cute, Kai. I mean, she was okay. I have very high standards. So, like when I say a girl is beautiful, it's because she's like a 9, an 8 or a 9. Like I'm very realistic about like beauty. So she was okay. She was cute. But she wasn't up there. She wasn't like the one with the boyfriend. The boyfriend was up there. She was like an 8.5 or like an 8 or something. She was up there. The one with the boyfriend. She was really out of place at that meeting. The Polish girl, she's actually getting her CMT and stuff, and she had done like a presentation. So she's more the intelligent kind. So anyway, yeah, she wasn't bad, Kai. But she only liked me because I had the CMT, I think. Anyway, or I have a good memory because I told her, oh, I remember you with your presentation. And she's like, wow, you have a good memory. Anyway, all right, enough of that stuff. Let's talk about Dogecoin here for Savi because he's like, come on, man, talk about my chart. What's wrong with you? So you have this resistance, right? And you rejected it, right? It rejected the resistance. So what is that? Around 30 cents, 30 and a half, just a little bit higher than 30 cents. So that 30-cent area, and you're a little bit below. So I don't know. I wouldn't buy this thing. I wouldn't, there's just really no reason to buy this here. I would wait for a support. If anything, wait for that midpoint area, the 20-cent area, if you must get involved, or maybe it'd be a good place for a starter position. These coins like Dogecoin, I have a hard time with swing trades on these things. These are more for you just buy and you hold them and you hope for altcoin season to return, right? So if you're going to buy and you're going to do that, you're going to buy and hold on to some, at least wait for some notable support levels. 20 cents is one of them. And then you have 15 cents, 15, 16. If that breaks, then you're looking at this low over here, which is like what, 9 cents, 9.5 cents. Okay. So, and that can happen. So I suspect with all of these altcoins, whether it's Dogecoin, I mean, they're generally the same. I mean, look, let's compare this to, what is that, Kai? The index of all these coins, total, total three. I think total three excludes, right, Bitcoin. And all right, so if we just look at total three, look, this is basically the altcoin space, right? Now, interestingly enough, look at this. Look at this. Yeah, so I mean, we could look at this one, right? So Savi, like you can use this as a guide as well. Look at this. Look at this. Yeah. So this gives you more of a view of the capitalization of like the garbage coins. Okay. And it excludes like Bitcoin, Ethereum. Okay. I mean, I think this one is relevant. I think this one's relevant. Okay. Yeah, I don't need to look at all of them. Look at this. And look where you are. Looks like there's a resistance up here. Right? Now, this could potentially break out. This is a weekly time frame, but this would be a tough call. So this sort of in line with what Doge looks like, right? Doge was at a resistance, kind of rejected it a bit. Okay. Oh, thanks, Kai. Well, yeah. So I mean, maybe next time I'll take a look at one of those as a overview of the market. But so I would guess that if this total capitalization pulls back to this area right here, which is what, 786 into that area, I would imagine you would get your buying opportunities for these coins to buy and hold. I mean, look where you are right now. You're at a potential peak. And apparently, we're just getting started printing money. So I don't know. This doesn't really, it's not really in line with the fundamental picture right now, really. Like it looks like we had our little run, and I don't know. It's a risky area. So maybe this is not the best time to be investing in these things, right? I mean, unless it breaks out, unless over the next few months, you see this, then that's going to be a change, right? But I think that would be like an all-time high, wouldn't it? Yeah. I mean, first of all, this thing was at all-time highs. That would be pushing all-time highs in terms of capitalization. So that may be a helpful guide as far as, are we in altcoin season or not? See, that chart shows why I think being long Bitcoin is a bit of a contrarian play because this chart, right? Well, that's true, right? Well, it's certainly at a resistance, but Bitcoin is the leader, and Bitcoin can do what it wants to do. You have to keep, they're not exactly pegged here, you know. It is very tricky. So that's why I like to think of Bitcoin as more independent, and this is a representation of all your garbage altcoins, right? So altcoin season is usually an effect of easy money, and we need to see if we see some easy money. then I think you'll get your altcoin season party. But right now, I don't know. It seems to be over. So watch this in relative to the dollar or interest rates. Watch this chart because I suspect if interest rates rise, like that 10-year yield rises, that's not going to be good for this. Right? So Savi, you could tie that into Doge as well. If the 10-year yield rises, then that's probably not good. If the 10-year yield sells off, then I would suspect that this would find support or possibly break out, which would be your continuation, because you could say this was altcoin season. You could say that, right? That was a brief altcoin season there, but it looks like it's peaked for now. And maybe it breaks out further, but we're going to need to see some catalyst behind that. Right now, it's tough to say. What do we have? What catalyst do we have besides all the money talk? Yeah, the money printing talk. But Powell changed his mind a bit. Not only that, but the interest rates are rising still, right? Or the yields are frozen, kind of. They're not really rising. We looked at that chart. So does that make sense? So use those puzzle pieces. That's why the bond market, people ignore the bond market when it comes to this. But one thing you can do, I'm not going to do it now because I'm going to sign off here in a minute, but you can overlap the bond prices. You go to a weekly or a monthly and overlap the bond chart, the 10-year note on this, and look at the relationship. Okay. So the thing is with alts is they need to be very specific economic environment to really run hard. Right. I agree with that, Kai. They need to be mailing us stimulus checks, right? If they mail us stimulus checks, alt season is coming, right? Or we need something like. But the thing is, Kai, like if we're going into extreme inflation, which I mean, look at gold, right? Look at silver. If we're going that route, like let's just say, for example, Powell gets replaced, right? And they put that Mirren guy in, and he's like, "Yeah, we're gonna have a party, people. We're cutting rates. We're going to zero, and I'm gonna mail you some stimulus checks just because I'm in a good mood." Like, actually, he doesn't do that. The Treasury would do that, but still, you know what I'm saying? Like, if something like that, if there's some kind of shift like that, because we're like, it looks like we're on our way there. We're just not there yet. But if they do something like that, and they're like, we're just going to print, because understand one thing that, I have a hard time. I'm not an economist. So I have a hard time piecing together, like, why do we want the dollar to go to zero? Like, why are they doing this? They must know what they're doing, right? And part of it is they want to pay back their loans with cheaper dollars. The government is notorious for doing things like this, right? So in their eyes, it's a win. They're paying back all their bondholders with worthless dollars, people. So that's one reason. The other reason is making us more competitive with countries like China. China, they control their currency and they make it artificially low, so everyone does all their business over there, manufacturing, everything else. So in our minds, or the mind of the administration, we're winning by having a lower currency so that everyone does business with us. I don't know. I mean, those are some of the arguments that I was considering, but you tell me. I'm not an economist. I don't understand the motivation for driving our dollar to zero, because that's where we're going. That's what it looks like right now. And I don't know, like, I don't see any efforts to change that. The only one that seems to be in the way is Powell. And they're criticizing him, and they're shaming him for doing that, for trying to do what seems to be the right thing, for a guy in his position. They're making fun of him. So I don't know. I don't know what to make of that. But so that's why you have to keep an open mind. All this fundamental talk, it's good to have in the back of your mind and look for confirmations of it. But if stuff changes, if things change, you have to be open to that. So you have to look at what comes out of the Fed. You have to look at these conferences, what Powell is hinting at. You have to look at other laws or other, tariff things, And you have to see how this affects the bond market, right? And you have to look at the dollar in the bond market because that's where you're going to see the signs first. Okay. And so keep an open mind. And so all this other stuff, we look at stuff, we look at the dollar, we look at gold, we look at silver, we look at oil. There are investment opportunities, but we are not in any type of extreme situation yet. Right. And I don't know what has to happen to turn this the other way, but it just seems that the only interest is to make the dollar go to zero. That's what it seems like. Just easy money, printing money, whatever. Right? They're taking out people from the Fed and replacing them with yes men. So I don't know. I mean, on the short term, that's a good thing. Businesses could borrow money cheaper. People can borrow money. We'll have easy money again, and people will feel good briefly. But when things get out of hand, like I said, get prepare your wheelbarrows. Except for Kai, because Kai had gold. Kai, you should have held on to your gold. All right, guys. So, any other questions? I know I've been talking a lot today. I talk a lot, and sometimes I can't stop myself. I just like talking. You guys, the 5 people that watch me, you guys are like my friends. It's the only reason why I come on here and do this on Mondays. Talk to my 5 people. I think the market does not like that, though. That the Fed loses even more. That the market knows, right? Like, and there was some interesting stuff about that recently. About the Fed. The Fed is, in fact, Powell emphasized that at his meeting at the Chamber of Commerce. He emphasized the independence of the Fed at that meeting. So he's, why does he have to emphasize that? The Fed is supposed to be an independent bank, but they're not truly an independent bank. They're like sort of government because the Senate has to approve people and all that other stuff, and the chairman and all those people have to be selected by the president, right? Stuff like that. So there is some government involvement, but it's supposed to act independently to avoid the political pressure, especially for short term election cycle stuff, right? That's the theory anyway. So I don't know. There's a lot of people that say the Fed is the problem, and the reason why. And yes, they're part of the problem. I mean, they let inflation run out of control. They took us off the gold standard, all that other stuff. And I mean, yes, but at the same time, they've also dramatically raised our standard of living and created infinite wealth. Except that Jeff Bezos got it all. That's the problem. He got all the wealth. Him and a few of those other guys. That the result of failing and one that isn't functioning, that's the result of research on that. I don't understand, Kai, what you mean there. That's the result of research on that topic. Institutions. Oh, so I guess you're saying, because we have problems in other places. I guess that's what you're saying. Our other government institutions. I don't know. But it seems like a mess. And it's like, I don't see how they're going to fix this. That's the problem that I have. People just have hope. Hope don't pay bills, man. I don't know. I look at stats. I try to look at the world in a as realistic way as possible. I know statistics can lie. They can manipulate numbers. I realize that, but I try to do it from more of that perspective than just have hope. I don't know. Anyway, all right, you guys. So I keep talking. What's Kai saying here? Research looked into why nations, countries fail. It's all about functioning institutions. Oh, okay. Yeah, good point. Good point. Right. And when these banana republics, I mean, what typically runs rampant in those places? Corruption, right? People lining their pockets. They don't care about the people. You know how that goes. Uh, right. But when there's high standards and there's accountability and all these other things and everything is running the way it should, right? There's structure, right? So yeah, yeah, across the board, you see it everywhere, right? On the West, you see it everywhere. You see it. I mean, look at Europe. I mean, and look at this country. There's, and I think there's other reasons for that. There's other things going on for that. We could talk about that forever. But there are certainly signs of failure for sure. And I just don't see how, at least in this country, I just don't see how they're going to turn this around and where that it's beneficial to the people. Like I just don't see that. I to rich people, sure, I see that, but I don't see how it's going to be beneficial to regular people. So and maybe that's their goal. I don't know. Anyway, all right. Then I'm going to get into conspiracy theories. I got to stop now, you guys. Others, I'll be talking all day. Half of you guys in Europe, it's like midnight over there. What do you got? How can you guys still be watching me? So, all right. So I'm gonna wrap this up. Good questions, you guys. I like talking about I like talking about the economic stuff and trying to tie it in to the technical side because it's important, right? The technical side is useless if you don't have some other context to also compare it to, right? To align it with. That's why it helps to pay attention to both in that sense. But when it comes to like companies, I'm more technical, like because yeah, there are some important fundamental aspects of a company if you're an investor. If you're not an investor, then it doesn't really matter. All right. Anyway, all right, I'll leave you guys with that. Make sure you check out uh, the center, like all of them, right? Guys, make sure you check out that Quant Guild channel. As you guys know, I don't promote people's channels and stuff, and there's no incentive for me to do that. I'm not an affiliate or anything like that. I just think you will get value out of watching a real guy. Okay, I appreciate real guys when they come along, and that guy, Roman, maybe he's from Romania too. I don't know. Romania. Uh, he's a real guy. Okay, and I respect the guy, and I can't say that for 99% of people on YouTube. Okay, so anyway, Quant Guild. All right, you guys. So hey, thanks for watching. I appreciate your time and all your input and having some fun here and listening to me for 90 minutes. Enjoy the rest of your day, the rest of your evening, wherever you're in the world. And thank you so much for